When we think of Japan's economy, we often picture cars and electronics, the iconic brands and cutting-edge technology that have made the country famous worldwide. But behind the scenes, the real powerhouse driving Japan's economic engine is the service sector, a vast and dynamic part of daily life. It includes everything from convenience stores on every corner to major financial firms, bustling tourism hotspots, world-class healthcare, and vibrant entertainment venues. The service sector employs the majority of Japan's workforce, making its health and stability vital for millions of families across the country. When services thrive, jobs and wages rise, fueling a positive cycle that supports communities and boosts the entire economy. Any shift in this sector, whether growth or slowdown, quickly ripples across the nation, affecting people from all walks of life. That's why economists, business leaders, and government officials closely monitor its performance, searching for early signs of change. They rely on monthly reports and detailed data to track growth, contraction, or stability, and to spot emerging trends. These reports guide government policy and business decisions, shaping the country's economic direction for months and years to come. As 2025 ended, attention turned to the latest service sector data, with many wondering what the numbers would reveal. The year had seen steady, if unspectacular, growth, enough to keep optimism alive, but not without concerns. Would this momentum continue into the new year, or would new challenges emerge on the horizon? December's numbers would offer the first clues, setting the tone for what lies ahead. These figures reveal more than just business activity. They reflect jobs, costs, consumer confidence, and the overall mood of Japan's business community. This data matters to everyone, from coffee shop customers to job seekers, shaping daily life and future opportunities across Japan. To gauge the health of Japan's service sector, experts rely on a key indicator, the S&P Global Japan Services PMI, Purchasing Managers Index. This index acts like a regular health checkup for the country's businesses, offering a quick way to see how things are going. The PMI is based on a monthly survey of business managers who are asked about sales, hiring, costs, and prices. Their responses provide a snapshot of what's happening on the ground in real time. All these answers are distilled into a single number. A reading above 50 signals growth, while below 50 points to contraction. This makes it easy for anyone to quickly understand the direction of the economy. This simple rule makes the PMI straightforward to interpret, even for those without an economics background. Because it's released every month, the PMI offers a timely and up-to-date snapshot of economic trends, helping people stay ahead of changes. Investors, policymakers, and businesses all watch the PMI closely, using it to guide their decisions and strategies. The PMI isn't just a set of numbers, it's a real-time story of business confidence, optimism, and the challenges companies face. It's one of the very first economic signals released each month, shaping decisions and expectations across the country. By tracking the PMI, everyone, from analysts to everyday workers, gets an early read on Japan's economic pulse and momentum. It's a vital tool for understanding where the economy is headed, helping people prepare for what's next. The PMI's clarity, speed, and reliability make it indispensable for anyone watching Japan's economy, from boardrooms to government offices. December's S&P Global Japan Services PMI came in at 51.6, still above 50, signaling growth in the sector. This number is important because it shows that, despite some headwinds, Japan's service industry continued to expand as the year drew to a close. This marked the 9th straight month of expansion, showing resilience in the sector. For nearly a year, businesses have managed to keep moving forward, even as global uncertainties lingered. However, the pace slowed from November's 53.2, making December the weakest month since May. The momentum that had built up earlier in the year was starting to fade. Think of it as a car still moving forward, but easing off the gas. The journey continues, but at a more cautious speed. New business growth also moderated, with some companies seeing vibrant demand and others reporting caution. The market was no longer as uniformly optimistic as before. This mixed picture suggested customers were becoming more careful as the year ended. Spending habits shifted, and some consumers held back on big decisions. The slowdown raised questions about the strength of the recovery heading into 2026. Would the sector regain its earlier momentum, or would caution dominate the new year? Economic progress isn't always a straight line. Periods of fast growth are often followed by slower spells. This ebb and flow is a natural part of any recovery. December's data was a reminder that expansion can lose momentum and that businesses must be ready to adapt to changing conditions. Still, the sector remained in growth territory, even if the path ahead looked bumpier. The foundation for future progress was still in place. The numbers signaled moderation after a period of stronger performance, hinting at a possible shift in business sentiment. For business leaders, it was a cue to stay alert and adaptable. Flexibility and quick decision-making would be crucial in the months ahead. The service sector's resilience was clear, but so were the challenges. As 2026 approached, the industry braced for both opportunities and uncertainties. Japan's service sector is a mosaic of industries, each performing differently. In December, finance and insurance stood out as the strongest, buoying the overall sector. Banks, investment firms, and insurers saw robust activity, hinting at confidence in future growth. This strength helped offset softness in areas like retail and restaurants, where demand was more subdued. When households tighten spending, these sectors feel it first. The mixed performance highlighted an uneven economic landscape. Not all industries move together. Some thrive while others struggle. Finance and insurance provided crucial support, keeping the sector afloat. Meanwhile, weaker demand in other areas reminded everyone that recovery wasn't uniform. Understanding these differences is key to grasping the sector's true health. The end of 2025 was a tale of both strength and vulnerability. Rising costs were a major challenge for service businesses in late 2025. December saw the fastest increase in input costs since May. Everything from materials to wages and fuel became pricier. To cope, many companies raised their own prices at a historically strong pace. This meant consumers felt the pinch, with services from haircuts to financial advice costing more. The result, inflation, as businesses tried to protect profits while customers' purchasing power shrank. Companies faced a delicate balance: raise prices enough to cover costs, but not so much as to lose customers. This squeeze on margins tested the resilience of service providers. Inflation became a central concern for both businesses and households. Despite slower growth, December brought a hiring surge in the service sector. Employment grew at its fastest pace in over 2 years, signaling business confidence. Companies needed more staff to handle recent sales gains and finally filled long vacant positions. Strong job growth benefits households and boosts overall economic confidence. More people working means more spending, fueling further growth. Businesses seemed to believe the slowdown was temporary, investing in their teams for the future. The contrast between slower sales and faster hiring showed a long-term outlook. Service companies were betting on better times ahead. One bright spot in December was a slight uptick in foreign demand for Japanese services. After months of decline, international customers, tourists, and business clients began to return. This shift, though modest, ended a 5-month contraction in export business. Factors like favorable exchange rates and renewed interest in Japanese expertise played a role. The tourism industry in particular welcomed this change. More foreign visitors meant more business for hotels, restaurants, and shops. Even a small reversal in trend was significant, hinting at new growth potential. The direction of change matters. This was a step toward recovery. International demand added a note of optimism for 2026. To see the full picture, compare services with manufacturing using the S&P Global Composite PMI. In December, the composite index slipped to 51.1, the slowest growth in 7 months. The service sector's slowdown was the main reason. Manufacturing, after months of decline, finally stabilized, no longer shrinking, but not yet growing. This created a contrast. Services still expanding, manufacturing finding its footing. The economy's momentum relied heavily on services, a shift from Japan's manufacturing-driven past. Restaurants, banks, and travel agencies mattered more to growth than factories. The stabilization in manufacturing was welcome, but services remained the main engine. The two sectors moved in different cycles, highlighting the complexity of Japan's economy. The service sector's health was now central to the nation's prospects. Despite challenges, slower growth, rising costs, and mixed demand, service businesses stayed optimistic for 2026. Most firms expected the slowdown to be temporary and planned new products, services, and store openings. This proactive approach signaled confidence in future demand. Many anticipated a rebound in both domestic and international customers, supported by strong hiring and a recovering tourism sector. The belief in better times was rooted in concrete plans, not just hope. The story of late 2025 was one of resilience, slowing growth, but strong hiring and deep business confidence. While headline numbers showed lost momentum, the details pointed to a solid foundation. Service providers were ready to face challenges with new ideas and investments. The sector's optimism suggested that Japan's economy could regain speed in 2026. Businesses were prepared to welcome customers back with renewed enthusiasm.